JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 30th of October 2020, so yep, welcome everyone. Welcome to this last trading day of this week, last trading day of this month, unless you're trading Bitcoin, of course. But yeah, guys, as always, quickly here, we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So, quickly jumping into the charts now. The first one I'm going to pick up here is Nikkei 225, as always. So the index, it drifted heavily to the downside. Everything kind of worked out according to the plan. So, or I should say, is working out according to the plan. Now, what I've talked about yesterday, basically what I was saying to you guys, that in a way, keep your eyes on this short-term downside resistance line taken from the high of the 21st of October. And so far you can see that yes, everything seems to be working out here nicely. This downside line continues to provide resistance, and we saw this further decline, a drop below yesterday's low, and yep, a further decline, which brought the index to the low of the, or should I say the current lowest point. Well, actually it's not low, no longer a current lowest point, it is the lowest point of October. So that was the low to 22,951 here. The low today, we actually managed to overshoot the previous the previous low here of October by just a fraction. So basically this hit the 22,948 zone, so approximately around there, guys. So basically, yes, the last trading day ended up with a new little new low for the month. Maybe it's not a significant one, but nevertheless we'll have to kind of point that out. So what we're going to do right now is, of course, going into November next week, we're going to keep an eye on this level here, the 22,948 territory. A drop below this, of course, would confirm a forthcoming lower low, and yep, further declines are possible. The only little problem with further declines is this little target right here, the lowest point of September, and that's roughly around the 22,878 zone, which almost kind of coincides with this 100-day EMA here shown as the green line, which in a way could provide a bit of support. So at the moment, like I said, that's where what I'm going to be aiming here for. But if that gets broken, if this whole area gets broken, then yes, of course, further declines are possible towards the lowest point of August, if I'm not mistaken. No, that's not the lowest point. That's the low of the 28th of August, near the 22,595 territory right here. But again, in order to consider that move, well, a bunch of breaks here are needed. But first, the most important is, of course, let's see how this is going to play out next week, in the beginning of next week. And if we see a further move lower, then yes, be very careful here, because this is where a holdup might occur, from where the index could reverse, go for a bit of a correction here to the upside, and then of course we'll take it from there. Because Looking at this picture, of course, now if we want to aim for some higher levels, well, we need to see a break of this downside line first, and then yes, of course, maybe also a push above the 23,382 territory right here could do the trick for more buyers at this, because at the same time the price could be placed above the 21-day EMA. So again, that's why for the upside, we're going to take a bit of a careful approach here and wait for a violation of this little short-term downside line. Shanghai Composite, and almost managed to reach my target here. So my target, if you remember from my previous videos, I've said that my target for now is this 3,202 territory near this upside support line taken from the low of the 19th of March. So the index drifted heavily to the downside today. Of course, as you can see, it reversed from this 3,280 zone. I've mentioned this one before, where I was saying that if it struggles to get back above it, above this 21-day EMA as well, then yep, a slide here could be possible. A move towards this upside support line, yep, that could be a realistic target. So at the moment, of course, the index is already closed. Now we need to wait for Monday. However, it's also going to be quite interesting, similar as with Nikkei. Can this drift a little bit further south? If it can, then yes, like I said, keep your eyes on this whole support zone right here. But if this upside line gets broken and the price falls below this highlighted area right here, the 3,181 zone, now this is where it could become very interesting for the sellers. So jumping into the German DAX, and I mean, yesterday I talked about this one, and I told you guys that be very careful near this area, and keep your eyes on the close, because if we would get a nice daily close below the 11,575 territory right here, then yes, maybe further declines could be possible. Let me just take a look at the cash index right now. We can see that, okay, so this continues to drift lower, and I mean, this is not really looking good here. So the price is currently balancing near around the 11,400 zone. So basically we have drifted, the cash index drifted further below this area, probably mainly driven by the sell-off in the Asian equities, yep, that's of course kind of that weighed in here on the German DAX cash index. So now the next target here is of course this 11,235 territory. I spoke about this before. That's the high of the 30th of April and is near the high of the 20th of May, and yep, that's going to be my next target here, especially if the price continues to trade below this 11,575 territory. So far the index is around the 11,400 level, so basically we'll have a nice opening gap here to the downside again, and like I said, the next target is this one right here. However, of course, if something happens radical today and we have a very sharp decline, then you could keep an eye on this low here of the 22nd of May near the 10,867 territory. So jumping into DXY, so yep, beautiful movement here. Yesterday DXY managed to end the daily candle fractionally above this this barrier, this 93.90 level that I mentioned before. So in a way, all this kind of creates this nice positive atmosphere here, and yep, in a way, for now I'm gonna keep an eye on this one, and if certainly at the moment everything's looking quite positive here for the dollar index, unless something changes today, unless we get back into risk on environment today somehow. I don't know, that's a tricky one today, but again, let's see. But to be honest, if the same risk off environment will remain today, then yep, the US dollar could continue rising. And the reason why I'm saying that, because again, recently the US dollar started acting as a bit of a safe haven here. So and you can clearly see that by this recent uprise, and comparing it to the sharp declines in the equity markets. Now, of course, for now, like I said, I'm going to stay a little bit more positive, but my next target is only near the 94.65 level right here. I talked about this previously. I'm not going to rush into anything like more aggressive here, but yeah, that's going to be my main target. This level right here, where the arrow ends. ends near the 94.65 territory. That's marked by the lowest point of March and near the high of the near the highest point of September as well. So keep your eyes on that one. Gold, of course, rising dollar, putting pressure on the this yellow metal here. So the most important is that the commodity is trading below the 1877 territory. I talked about this one, and what I was saying previously this week, that if we get a daily close below it, then yes, further declines are possible. For now, I'm going to remain bearish unless the US dollar somehow reverses sharply to the downside. But at the moment, it's just it seems that we could see this see gold kind of drifting further south. So keep your eyes on that one. Initially, the target could be this one right here near the 1848 territory. 48, 49 territory right here, and marked near the lowest point of September. But if that fails to provide decent support and breaks, then yes, of course, this would confirm a forthcoming lower low, and the next target here could be that 1818 level right here, and yep, we'll take it from there then after. In terms of the upside, I'll take a very conservative approach and wait for at least a break of this downside line and then a push also above the 1933 territory in order to consider some higher levels. Ripple is dropping. I mean, one of the weaker cryptos among all the top ones is Ripple, and look at this movement here. I mean, if Bitcoin and Ethereum are still kind of hanging in there, Ripple is a total disaster. And here you can see now the crypto is breaking this upside support line taken from the low of the 13th of March. Now, of course, don't get me wrong. I mean, it could drift a little bit lower here, but I would prefer to see a drop below this 0.2288 territory right here in order to get a little bit more excited with further declines. And initially I'll target then the 0.22 territory marked by the lowest point of September. But if that gets broken, then of course the next target here is this 0.2120 territory. So let's keep an eye on this one. But again, at the moment, also some of you might see here as a potential double top pattern here, which of course tends to be a bit of a more of a bearish one. And we are getting a break of this neckline as well. We are getting a break of the 200-day EMA. So basically, a lot of factors weighing in here, a lot of negative factors weighing in here into Ripple. So that's why be very careful. The only little kind of suggestion here could be, of course, you'll be the judge for yourself, but the little suggestion is probably wait for this daily candle to end today, because what I don't want to see here is, of course, as always, I don't want to see is a false breakout. So I don't like these. That's why in such situations where it seems like it's very clear, it seems that it could work out nicely here for the bears, the bulls could step in here and drive this one much back to the upside, this way kind of potentially forming a little range here. But again, that's just a an idea for you guys. Yes, I'm still a little bit more bearish than bullish, but I would prefer to see this one kind of this daily candle staying today below this upside line. And then if it drops below the 0.2288 territory, now this is where it could become even much better for the sellers. For the upside, as you can see by the arrow here, I need to see a pop above that 0.26 territory first before considering the upside. Now jumping into a few pairs, and AUD NZD. So I haven't looked at this one for quite a while. Basically, it's quite an interesting one sometimes. Here, for example, right now you can see that the pair is, or should I say, this week it found support, or should I say, so far is finding support near this 1.059798 territory, so basically around that 1.06 territory. So at the moment, of course, this 1.06 territory is doing its job. It's kind of acting as a good support zone. However, if we get a drop below this area again, then, well, I'm not going to hesitate to aim for the lowest point of July near the 1.0555 territory right here, approximately around there, this level, and then I'll take it from there. But at the moment, yes, it is It is tricky, but at the same time, it's very interesting. So this pair now is trading below this tentative downside line. I mean, you might draw this one, different one, maybe from here, for example, which has a few more touches. And in a way, I wouldn't blame you for this one. It looks like quite a decent downside line here, especially on the 4-hour chart. This is a daily chart, by the way. So if we get a break of this downside line, and if we do get a nice push above this barrier right here, the not this one, but this one right here, which is at 1.0674 territory, and also marks the highest point of this week. Now, if we do get a nice pop above it, then we could consider maybe a possible larger correction to the upside. And the reason why I'm saying correction, because we're still below this downside line taken from the high of the 18th of August. So in other words, for now, we are at a very interesting spot. Probably I'll take a bit of a neutral stand on this one, because yes, we are still trading below this little short-term downside line, but I would prefer to see a drop below the 1.06 level again, and then aim for lower levels. So let's keep an eye on this one. Let's see how all this is going to play out. But at the moment, it's going to be quite interesting, and I would need to see, like I said, for the upside in the short run, I would need to see this one climbing back above this 1.0674 territory right here. Now, jumping into an NZDJPY, now something that I haven't looked at for quite a while, and basically this pair, let me just bear with me one moment, guys. So this pair is drifting lower today. Now, we did get some data, of course, the usual kind of data dump, as they call it, from Japan, as at the end of every month. And yeah, we did get the unemployment figures that came out much better than the expected. Then we had the industrial production, Japanese industrial production, which also showed up as a nice number at 4%, comparing it to the forecast of 3.2%. So everything kind of, in a way, leading to the fact that, yep, there is increased yen buying right now. The only little issue here is, of course, it's unclear if the yen buying is due to the data, or actually due to the fact that the yen is considered to be as a safe haven. And given the market turmoil right now, yes, everybody's jumping into the Japanese yen, just because of the market weakness, the risk-off environment. But that's what I'm saying. So that's why it's a little bit of a difficult one here. At the moment, basically what we could do here is look at this from the technical side. And basically what I'm going to keep an eye on are a few of these support levels. Now, one of which is the 68.76 territory, and the other one is the 68.64 mark right here. So this last one is the lowest point of September, and the previously level that I mentioned is the lowest point of August. So in other words, guys, for now you can see that the pair is approaching this area. In a way, if you're looking for some very, very short term, something from the very, very short term perspective, I'm going to aim for this area. That's my next target. And let me just actually highlight that very quickly. So this is going to be my next target, let's say even for today. But if we get a decent drop below this, now this is where more sellers could start joining in and driving this one further south. At the moment, what we could be getting ourselves here is also a possible descending triangle taken, where I can draw this downside line taken from the high of the 3rd of September. And of course, according to all the TA rules, you know that these patterns tend to break to the downside. However, we have seen many times happening the opposite, so that's why I'm gonna be very careful here with this idea, and mainly kind of stick to the fact that if we get a nice drop here below this 68.64 level right here. Now this is where it could become very interesting, because such a move would confirm a forthcoming lower low, and yep, further declines here could be possible. So let's keep an eye on that one. USDCHF, now looking at this picture here, and you can see that the the pair is climbing higher slowly, of course. It managed to reverse. Now let me just adjust a few levels here, by the way, guys. So probably let me just actually remove all the drawings and start this one fresh. Now, first of all, you can see that the pair recently here in October found good support around this level near the 0.9030 territory. It didn't really quite reach that 0.90 level, the psychological 0.90 zone, but yep, it reached this area instead. From here it reversed, and now the pair is testing this area of resistance around 0.9165 zone. So So, of course, given that we managed to climb back above the 21-day EMA, of course, it increases the chances for a possible move towards this 100-day EMA shown as the green line, which you can see that also acted as a nice area of resistance here back in September. So, in order to aim for some higher levels, wait for a pop above the 0.9165 territory, and then, yes, we could go for this 100-day EMA to see if it is going to do the same trick again and if it's going to provide resistance again. Of course, if it pushes further north, then the next target is the highest point of September near the 0.9296 level, but then we'll take it from there. But for now, for today, probably the most important level is this 0.9165 territory right here. GBPCAD now, of course, looking at the data, today's data, if I'm not mistaken, yes, we do have the Canadian GDP number coming out for the month-on-month. On a month-on-month basis, the current expectations is for a bit of a decline here. So basically the previous number was at around 3%, but the forecast is currently sitting at 0.9%. So basically it's showing that there could be a decent decline. Now, of course, let's keep an eye on this. Let's see how all this is going to play out. But from the technical side, last time when I looked at this pair, you can see that I said that we may test this downside line taken from the high of the 31st of July. We did that, and then we could see a bit of a decline, and we did that as well. So now the big question here is, can it actually drift further south? Now probably keep your eyes on the data today, keep your eyes on the number from Canada. We'll see if this somehow gets maybe could get a boost, but even if it gets a boost, then it could travel back to this downside line. That's what I'm going to be aiming for initially, but if that gets broken, of course that's a different story, and we could see GBPCAD pushing further north. So if you want to be a little bit more on the cautious side, wait for a pop above the current highest point of this week at 1.7350, and then aim for some higher levels, because that would confirm a forthcoming higher high, yes, and more buyers could be joining in. Now in terms of the downside here, what you could do here, of course, is keep your eyes on some of these levels here. You could keep an eye on the low of this week, which is roughly around here, the 1.7119 level. Now, of course, don't get me wrong, I would prefer to see a drop below this level first before kind of aiming for some lower levels. But I do understand that we're missing out on a few bit of an area right here, could be missing out on a bit of an area right here as well. So what you could do is once again keep your eyes on yesterday's low. As you can see today, we had a bit of a drop below it. Now the bulls are pushing the rate back above this 1.7208 level, but if we get another slide below this territory right here, now this is where we could maybe consider maybe a bit of a decline here towards these EMAs, the 21-day EMA, the 100-day EMA, and the black one, which is the 200-day EMA. So and then yes, of course, we could consider a further decline here. So that's why again, for today, for example, specifically, you would keep your eyes on yesterday's low here near the 1.7208 level, and if that gets broken, then yes, further declines could be possible. EURGBP. So, one of my favorite annoying pairs, EURGBP, continues to flirt with this whole area. Now, basically, I need to kind of increase my space right here, this key support zone, which, as you can see, is acting as a nice area of support. This level, for example, here, the 0.9007 level, continues to do the trick. And previously, this month, in the middle of this month, the pair did provide, or sorry, the pair did find good support near this level, and yesterday the same happened again. The pair drifted lower, tested that area, and then rebounded back up. Not only back above not only, but it drifted back above the 0.9025 level. So in a way, for now, we just cannot not really do anything, because as I mentioned to you previously, guys, for me to get excited maybe a little bit with the upside here, within this little range, I would say I would like to see a push back above the 0.9090 level. We did have that kind of flirt here on Monday, but a flirt with that level, but as you can see, this is what happened. So that's why I would prefer to get, like I said, a push back above the 0.9090 level first, and then aim for some higher levels. In terms of the downside, I'm waiting for that 0.1907 level getting broken nicely in order to aim for that 200-day EMA, which, as you can see, can act as a nice area of support, like the same as it did here in the beginning of September. And finally, EURUSD. So the pair is drifting lower. The pair is trading below this 1.1696 territory, and in a way, to be honest, I'm going to continue targeting the downside right now, because we had that daily candle remaining below it, and I'm going to stick to the same plan. For now, basically everything's looking quite bearish for me. My next target is let me just kind of draw this arrow like here. My next target is this 1.1612 territory marked by the lowest point of September, and then I'm going to take it from there, because if it wants to push further south, then yes, this would confirm a forthcoming lower low, and the next target here could be that 200-day EMA. But at the moment, let's keep it short and simple. Like I said, my next target is the lowest point of September near the 1.1612 zone. In terms of the upside, well, I mean, I would like to see this one maybe climbing above this 1.1867 territory, but to be honest, we could already start looking at some upside if we get a push back above the 1.1787 level right here, the one that I mentioned this week as a good potential area of support, which if it gets broken, could open the door towards lower levels, and then now this area could act as a good area of resistance. So again, guys, keep your eyes on that one. Let's see how this is going to play out, but for now, I'm leaning a little bit more to the downside towards that lowest point of September. Okay, guys, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys. I really appreciate you joining in. If you want to catch my video later on, my traders tea time is always 14:15 GMT. But for now, guys, I hope you have a wonderful trading day. So yeah, stay safe. And if you're not going to join my video later on, then have a wonderful weekend, everyone. So see you on Monday. Thank you very much, and bye-bye.